Well, good afternoon. You all are in the Central Lending How to Become a VIB or a Very Important Broker. Let's see who is here today. If you are a loan broker, go ahead and say hello in the chat. Do we have any loan brokers here today? Say hello and where you're calling from. Dave. What's up, Dave? Down in Wellington. Excellent. David, you already know how to be a very important broker. I might call on you to present this thing. Who else? Who else besides David in Wellington? You do, yes. Awesome. Well, now there's always something new to learn, so fired up that Dave is here. Another few seconds, we'll get rolling. But a couple of things for today. We'll keep this straight and to the point. We'll go over the fund, little introduction for myself. This is for very important brokers, but even if you're a borrower, there's something for you to learn with this as well. We're going to talk about leverage. That's probably the highest focus for a lot of our borrowers. And then how do you pick the right lender? And sometimes that's not central lending. We want it to be, but what are some good ways to pick a lender? And then we'll do some Q&A, and I'll even upload a deal live. So that'll be pretty cool. We'll do a live deal. All right. Well, I think we're in a good spot. A little bit about me. I am Jason Borger. I am the lead for originations training. So we have a culture of bringing in new account executives, getting them up to speed so they can go help you, the brokers. So we believe a lot in our account executives. I live in Chapel Hill, North Carolina. Go Heels. That's a picture of me, my beautiful bride, and my little daughter with Ramses the Ram. So that's pretty fun. I went to Liberty University, go Flames. And I've always worked in lending. Right out of college, I worked for a bank in Tallahassee, Florida called Hancock Whitney. I moved to Durham, North Carolina, 2019, worked for Truist. I was one of the first branches to consolidate a SunTrust and BB&T, so enjoyed that assignment. Did a short stint in sales to lenders, but ultimately I knew helping borrowers, helping other lenders succeed is where I needed to be. So I came on board to Central Lending. This is my third summer here coming up. So pretty excited. And that's Tally the dog. Who can be having a bad day when they're like Tally, just eating their birthday cake? So that's a little bit about me. A little bit about the fund. So we are in Florida, right where David is, in Lakeland. So like Tampa, Orlando area, Florida based. However, we serve most states. Few states on the West Coast we don't lend in, but 39 states total. Our products include bridge loans, rehab loans, new construction, DSCR. And we've actually had a lot of good updates on DSCR, which we're excited about. Our fund has participated in projects themselves. So we've built houses, we've done fix and flips, and we're proud. We funded almost 2,000 loans. So done a little bit as operators on the real estate side, but we love private lending. Some of the numbers: the company has funded almost $350 million in originations. Our active servicing portfolio is right around 500. I think this week we'll be at 500 loans. 100 million total, so about 200,000 is our loan. That's just a very safe size for us. We like to do smaller loans, but a high number of them. We manage investor capital. So we have over 41 million now. And probably our most proud stat is we are an income fund. So we return money. We do not lend to lose. We lend to make repeat borrowers. And I know, especially for our brokers, you find borrowers who are repeat borrowers. You want them to be successful and do many deals. 98% of our deals have returned their principal. So that's probably our most proud stat on this page. And no, well, I spoke too soon. The investors, we raise money from friends, family, people that we know, and we've never missed a distribution. So that's our most proud stat. So why would somebody choose Central Lending? A lot of good lenders. There might even be some lenders on this call, and I'm sure they're very good. But where do we fit in the market? Well, we're private, so we have a fund manager, CEO. We have a director of sales. We have a loan manager. I help some of the new folks as well get their deals ready, but you have actual human beings looking at these deals. We're not just an algorithm or a spreadsheet. The deals can move quickly. So deals that are purchases that need to close next week, we'll get there. But the big thing is that it's easy. So majority of our team is in Lakeland, Florida. Thank you, Sean. Easy to work with. I hope that's for Central, but even if you're looking for an easy to work with situation, yep, that's what we're looking for as well. But most of our team's in Lakeland. I live in North Carolina. Our team keeps growing, so we spread the team out, but we're very cohesive. We meet regularly. The call I just got out of, that's for brokers. So brokers are always welcome to log in, talk to me, talk to our sales director, Isaac, talk to Andrew, our fund manager, but also just get an easy loan. I think that's really what people have on their minds. Our purpose, we exist to provide funding that is flexible in structure, reliable in execution, and fast when it matters. A loan that closes next week is no good if the contract is on Friday. So we work really hard to make sure we are on point. So here are some common mistakes that I see new brokers make. And I should also clarify, low broker's tough. We get to sit in meetings and we get to, make decisions, deals that make sense, but you're the one that actually has to talk to the borrower. So you are delivering the mail on their behalf and you pass along what they need. But if there's anything from this meeting, maybe you'll just better understand how can I present this deal best to Central or whichever capital partner I decide to use. Well, the first one is the deal has to make sense. We call that our viability metric. So you've heard of debt service coverage ratio. We have a viability ratio. After you've done the deal, you've paid all your closing costs, paid the broker fee, paid the lender fee. Are you going to end up with any money? The answer is yes, and there's a good chance you pay us back. But if the answer is no, then we just ask the question, why are we even doing this loan in the first place? The second one is funds. So with a lot of our loans, they're fix and flips. You start the loan, you make a down payment, but then you have to keep coming up with cash. Now, granted, you get reimbursed, but you're making payments. There's other costs you didn't even think about. So we want to know, do you have enough funds? Do you have the required reserve? If we look at that from a common sense perspective, we want to know that the deal will be able to maintain, but do they have the funds to do so? Another one is over leveraging the deal. So it's tough. If people make up their mind that they are in on leverage, then they are 100% all in on leverage. But in a second, I'm going to show you our thought process behind how we come up with leverage. Leverage that is too low, well, the lender wins, but we'll fund one or two deals that year. Loans that are too high, then that's an undue risk to us, the lender. And I would even argue it doesn't put the borrower in a good place. So we'll talk about how we look at leverage. Using third-party comps. So we're all for realtors. I'm sure there's some realtors on this call. We love wholesalers. We're friendly on those. But we want to know, has the borrower themselves done some due diligence to figure out, is this deal going to make any money? And if they have, great. That's what we want. People who are not going to benefit from a commission to be the decision makers on these. No clear exit plan or backup strategy. Deals work great when we sell or refinance at the ARV we forecast. But what's the backup strategy? What if the market swings? What if your contractor takes longer? What if you don't get the value that you think you're going to get to refinance out and keep this as a BRRRR property? So some ways that you can consider what is the right type of deal, what's the right type of lender. Not all lenders are the same. So I kind of told you where Central's point in the marketplace is. Summarize, I think we are trending, excuse me, we are trending more and more. Where do we need to be competitive? I wouldn't call us a no down payment lender. Some lenders do that, they do well, but for us, we always want to know, is there some sort of reserve? Is there some sort of backup? But just how competitive. And actually, we rely pretty heavily on brokers to bring us, other lender structures to say this is where we should be. So if I had to summarize where we fit, yeah, I think we are reliable as they come and trending more and more for more aggressive leverage and certainly less fees, which I'll show you in this when we upload a deal. Yeah, another tough thing is lenders will just tell you what you want to hear. They'll promise, no money down, no very low points, and then you actually pull the deal and it's way different. But we go through steps. I train, excuse me, I train our new borrowers or our new AEs to make sure that they're accurately representing these deals. I train to make sure that we're accounting for, how did this deal come about? And does the leverage and fee make sense? Waiting too long to engage a lender. So for most investors, they kind of have their financing from day one. Excuse me. So we dig in a little bit. If we see a contract that's a month, 2 months old, we just want to know why. Communication. Even with emails and text, that's still, you are relying on somebody to move the deal forward. We love portals. We even give our high-level brokers, our VIBs, access so they can see the back office. So let's talk about the experience. We'll lend to first timers, but we want to know that they, again, have just a clear plan. They have reserves, they have the credit. We want to know as well about the, what is their team makeup? So does the team itself make sense? So there is some risk involved in that. Another one that speaks to the, the experience of it. We're located in Florida. A lot of people will try to buy hurricane damaged properties or flood damaged properties. But if you live out of town and you've never heard of this, for example, this FEMA 50/50 rule, to us, it makes sense to understand the risk involved. So this comes from human beings that are watching after these deals. We don't let deals that don't have a chance get too far. And then if there are some edge cases like that, we really petition it, but we rely on the full story. How experienced is this borrower? So there's a whole capital stack out there. There's great private individuals. So those are people local to the market that just lend their own cash. There's direct lenders like us. And then there are chains of lending. So some of you on this call are our brokers. like you see there, and the broker can take the deal wherever. So we love our broker partnerships. We've had a lot of success because of their hard work. And we are one of the many options that they can take their loans to and execute. Banks, you all know banks. I worked in banking for a long time, and we didn't do a lot of rehab lending. It's more of a cash flow scenario. Through private lending, these are not cash flow loans. So I didn't want to do an exhaustive underwrite. I do want to show you all the deal before we sign off. So we'll pull up Milo and show that to you. But more so, I want to show you just what are some of the red flags. If a broker brings us a loan, I'll hear a common phrase of just tell me what you want and I'll bring you only those deals. For a bridge to bridge loan, those are tough. If somebody didn't pay off their prior bridge loan, it's going to be tough for us to refinance that. We do it on case-by-case basis, but usually have to bring cash to close, not get extra cash, which is kind of the opposite of what they want. We already talked about the contract. We want to know why we're just seeing it after it being a month or two old. Rapid high repricing. I was just talking to one of my AEs before this call, and somebody bought a plot of land around Philadelphia for $6,000. And now they're finally ready to do their project, and they say it's worth $70,000. So some time had passed, but I don't live in Philadelphia. Is it common for land to go up 15 times the purchase price? Maybe it is. But for those rapid high price appreciations, we just want a solid underwriting story of why we should believe that. Wholesalers. So we do look for wholesalers. I would add that of all the lenders, we probably have the most lenient term. We don't have an actual cap. Some lenders do. We do not. So you can charge whatever wholesale fee you like on top of your loan. And then we'll look at financing each one case by case. The big thing is, does the as-is price support it? This is a big one for us. We're trying to guard against fraud, and that's probably one of our biggest risks in our industry. So we want to know, is it a deal that was done in good faith? Is it, two non-related parties buying and selling a property? If it is, great. If it's not, that's okay too. We just want to know about it up front, and we'll price it accordingly. Different partnerships and entities. So we actually don't have partnership seasoning. You could start a partnership today and apply for a loan this afternoon. But again, we just want to know the story. How does everybody in this team know each other? Who's bringing what to the deal? If we're trying to hide something or hide someone, then we take issue with that. But if you tell us up front, who's every related person? Why are they there? We fund a lot of deals like that. And the big one is a loan. Tell me a loan that's 60 seconds or less to explain. So that's one of the things I love about training our new hires is, they get really focused on filling in the application right and gathering the whole file. I tell them, if you were to just set this aside and have a conversation like we're having now, tell me what's going to happen with this loan in a minute or less. And if they can do it, it's a good deal. If we start to talk about related parties, unrelated parties, and how the value's gone way up or gone way down, then we lose it. So can you succinctly explain your deal? Leverage ratios. So I think this is one of the most important things to get right. Leverage that's too low, well, the borrower might not have gotten everything that they need. But if it's too high, the lender could be exposed. So we look at the cost of the deal. We're a loan to cost lender. We also look at their ARV. So what will the end value of the project be? We do look at the loan versus today's value. That's a part of it, but we really want to connect the dots and say, where will we be when this is all finished? And certainly, what are we going to advance on day one? That's an important piece to us. All those have to align to come up with the right leverage where everybody wins. We look at credit score as well. We look at background events. So has the person had a lot of non-payments and have they changed? We hear that a lot where they used to be one way. Now, there another way, does their credit and their history back that up? We like borrowers with experience. We'll give them credit, whether it's a rental owned, a fix and flip, or a ground up. We also like it if they know their market. We will help investors who don't live in the market, but we feel so much better if they can go and lay eyes on the property. Sometimes property is a little more rural than others. We'll fund those, but just it has to be at the right leverage. Renovation ratio. So we will fund, a heavy rehab and a light purchase price. Buy a house for $30,000, fix it for $100,000. You're all in for $130,000. We will fund those deals. What are the comps in the market? So deals that have a lot of comps around are super easy to do. If it's a new concept to the market, or maybe it's a little more rural, honestly, we just don't know. But we try to come up with common sense solutions. And you as the broker, you can really help us out by pointing that out from the front end. Is this, probably your biggest hurdle in this is what are the comps going to be on this? Down payment's a big deal to us. Some lenders don't even collect bank statements. We want to know where the funds are coming from. That's just hugely important. Operators who use their own cash just have a lot higher success rate. And that flows into the borrower liquidity. So how do the loans get through? How do they stay a simple loan? Well, it starts with a loan submission request. I'm super excited. We're going to submit one right after this. And right out of the gate, we will know if it's a canceled or withdrawn loan. But if it's not a canceled or withdrawn loan, then it would go to our sales desk. And we would look at all those criteria, which we just discussed. They may come up with a decline. They may come up with a qualification. We've reviewed the contract. We see the notes on the file and everything fits. But sometimes there's just something that's unclear. What's going on with this file right now? This contract's been out there for a minute. The property looks a little rural. What's really going on with it? And the account executive and the broker, they dig in and they understand that. Because what we don't want is to get a loan into processing that never had a chance to start with. That's not good for the broker or the borrower. So we finally get to the point where the deal is approved and the deal closes. So we try not to overcomplicate it like that. I'm going to show y'all just a second, kind of the workflow of it. But any questions on the fund or anything that I mentioned today? If not, we'll go ahead and do a live submission. Okay. All right. So to fund deals, you can reach out to me. I'm happy to, honestly, you can send an email back to your invitation today. But what we think is even more effective is you getting in yourself and seeing how the product works. So the easiest way is to go to our website, centrallending.com. You submit a new loan. And these are all the loans that I have in status right now. I oversee the new hires, but for you, it would just show all the loans that you've started. You go up here to the top, and let's say we're doing a fix and flip. You pick an entity. If you don't have an entity, you can just come up with an entity on the spot. But if you have a full file, we want you to upload it the proper way. You would enter some guarantor info as well. Here we go. We'll just pick Senior Account Executive and Jason LLC. We'll plug in an address in the fine state of North Carolina. We don't lend in the Dakotas, but we do in North Carolina. Then you'll enter your deal metrics here. So what is their credit score? Do they own any properties? Have they ever done flips? We'll give credit for the past 2 years. The purchase price we'll assume is $200,000. Notice how we talked about deal profitability up front. So we designed these. If the deal's not profitable, it's going to stop you. So let's say they come back and say, well, it's not going to make a lot of money initially, but I know in the long run, this property is a winner. Well, we're going to stop you right here so that way you can have a conversation with your borrower and say, I don't think that this pencils out necessarily. So we think that's important. All in the spirit of entering the right deals and knowing that they're a good fit. Down here, you see your pricing. So we think that's important as well. You can see your pricing down here, and you can go as high as 92.5% leverage for the highest fee, but they might say, well, I don't need 92.5. I'll go to 85. You can get an even lower fee. Another thing that's nice on this as well is thank you, Camilla. The other thing that's nice is you can pick the options, and you might say, well, let's say instead of 740 credit, they have 640 credit, and it changes this live. Or they might say the fee is pretty good, but I think the interest rate's a little too high. You can reduce your rate with a slight increase in your fee, or you can go the other way around and do a mix and match. So you can mix and match these loans. You can change the term. We want to give our brokers everything they need to keep these deals moving forward. So I'm just going to pick this top one. The signing date, if you got to close next week and it's a good file, we'll figure out a way to close it next week. But this is just kind of our average based on what we see for new files. So I'm going to click the 24th. And there's your deal metrics. So if you are the borrower, it gives you your monthly payment, shows you your cash at close. If you're the broker, you can do a little snippet right here. Go ahead and get the deal into processing. We're not going to pull any credit. We're not going to do anything like that, but it gets you in there because then you can see the full scope. So if you want to go through this deal, you would keep hitting next step. And I won't go through all the steps, but it's your typical loan. This is what it looks like from a high level. Borrower's info or the deal info, the rehab info. There's your insurance info, your title. Here's your entity that's borrowing as well as your guarantor and some agreements. But a typical file takes maybe 15 minutes to upload, and to get pricing, it usually takes about 60 seconds or less. The other thing that's nice for our brokers is they can remove. So I'll pick on Dave. He's my faithful initially that came in. But if Dave was my broker, I would add him. No, he's not. He's assigned to his AE. So he doesn't roll up under me, but I could pick Dave and he could do that. Another thing that we're really excited about is you can actually be a lender on this. So this software, we want y'all, the brokers, to use. Even if you don't bring loans to Central, we figure we got a better shot at it, at least if you're using the software. So there's no cost to this. The other thing that's nice is if you become a lender with us, we put your information up here. So a lot of benefits to that. You get discounted pricing. So with that, there's an expectation, that we don't just get a deal occasionally, but we're one of your regular partners. You get better pricing. And then when there's any correspondence with your borrower, it's under the name of the lender. Again, we'll go back to Dave Lending, LLC. So anyone on this call can broker. That's not a big deal. You can do that here. But if you do heightened volume, if you are, just like the name of this call, a VIB broker, you're closing 2, 3, 4 loans with us each week, then yeah, we'll give you full access to this as well as even our Monday system where we upload the loans, which is pretty cool. Some other neat features that are in here, you will have a inviter link. So where's mine? Marketing links. So I can click on a link, and I'm probably in the wrong place, but you can send out a a link. You can do a blast to all your borrowers. So anytime they click on that link, it automatically rolls into you. If you want to send this link to other brokers, when they submit a deal, it rolls up to you. So it's pretty cool. Derek asks, how do we become a lender? Great question, Derek. The best thing you can do is set up a meeting with me. My contact info was listed in the invite, or just reply back to the email that you were invited from, and it'll come back to us. But that's how you become a lender. But that's really where we see the future of private lending is, you got to have a great technology stack. We built this ourselves. We've had almost 2,000 closings where we've seen a lot of pain points and objections, and we said, let's just build our own thing from scratch. Kudos to Andrew and our technology team. We did this. We started it last summer and continued to, build it out. But that's the nice thing about having your own project is you can put all the features in that you want. And that's really the goal, is to put the brokers in the driver's seat so they can drive the loans now. And then if you already have 2 loans in processing, whoever you're processing those with, Derek, tell them I want to be a lender, not just a broker on this. And then they're happy to set that up for future deals. So if you're already in, talk to your AE and they tell you what that means. The big thing with this, though, and I think it's something you want to think through, for a lot of brokers, they work with multiple capital partners. So they really want to make the connection in the intro, and then they kind of want to step back so they can focus on their other loans. By being a lender, we're giving you login information. So we're expecting you to be in the sales meetings and to really be there pushing the deal forward. So it is it's a paradigm shift, but in exchange, you get better pricing, you get better technology. So yeah, if you're with Thomas is great. Really have him walk you through the pros and the cons of what it means to just keep using Thomas versus if you really want to drive these deals on your own. He'll step in occasionally, but you're the one that's primarily moving the deal forward. But that's it in a nutshell. So we wanted you all to see Milo, and more importantly, wanted to put this there. And if you've never done a deal with Central, just mention this webinar, and whoever's running your deal, they'll give you a discount off of your first closed deal with us. If you're already doing deals, Thomas is hooking Derek up. Christian is keeping David at really good pricing. For anyone who hasn't done one, though, mention this, and we'll make sure we'll get you an extra discount off of your first submission. Any other questions before we wrap today? I'm not hearing any questions or seeing them in the chat, but y'all are great. I look forward. I recognized a few names on this call, so really happy to see that, and look forward to meeting you one-to-one if you don't already have an account executive, but certainly seeing your deals in processing. So we will wrap there. Y'all have a great rest of your day, and we will see y'all soon.